Welcome to The Explainer. Today, we're digging into a really fascinating prediction from an economist who thinks the crypto market is about to see a massive surge. And it all comes down to the U.S. Federal Reserve.
Okay, so let's get right into it. This is the forecast from Economist Timothy Peterson, and he's not beating around the bush. He's calling for a significant jump in Bitcoin and altcoins, and he's putting a pretty tight timeline on it, just 3 to 9 months from now. That is a bold call. So, what's he seeing that maybe others aren't?
So what's the engine that's supposed to be driving this huge crypto rally? Well, it all comes back to one of the most powerful financial players on the planet, the U.S. Federal Reserve. Peterson has a theory about them he calls the surprise effect.
Here's the core of his argument. He believes that, the market expects the Fed to cut interest rates, but it's completely underestimating the speed at which those cuts could happen. He thinks investors are pricing in this slow, gentle, gradual process, when history tells a very, very different story.
And he's not just pulling this out of thin air. Peterson is pointing to historical data. He argues that when the Fed kicks off a cycle of cutting interest rates, it almost never does it slowly. It tends to be swift, it's decisive, basically the exact opposite of what the current forecasts are baking in.
And this is where he gets his main theory, the surprise effect. The whole idea is that the Fed is going to move way more aggressively than anyone is anticipating right now. This sudden shift would catch the market totally off guard, and that forces a super fast reevaluation of what assets are worth, especially those risk assets like crypto.
Okay, so that's the theory. But how does it actually stack up against what's happening in the markets right now? To really get just how big of a surprise Peterson is talking about, we first need to understand what everyone else is thinking.
So Peterson's comments came right after the Fed's recent meeting on September 17th. They delivered their first rate cut of the year, 1/4 percentage point. Now, this move was no shock whatsoever. In fact, it was pretty much completely priced in by investors. We saw a brief little pop in Bitcoin's price, but it didn't last.
So the real question is, what happens from here? That first cut was a given, but what does the market think is coming down the pipeline for the rest of the year?
And wow, you can see the market consensus so clearly right here. According to data from the CME FedWatch tool, investors see another little 1/4 point cut at the October 29th meeting as basically a sure thing. We're talking over a 90% probability. This is that slow, gradual path that Peterson argues is so rare in history.
But, and this is a really important but, we gotta temper those expectations with a dose of reality straight from the Fed itself. The chair, Jerome Powell, has gone on record saying their decisions are not predetermined. That basically leaves the door wide open for them to do something different from what the market is so sure about.
And this uncertainty isn't just between the market and the Fed. Even among the biggest financial institutions in the world, there's no single, clear vision of what's going to happen next. They're all over the place.
Just take that last meeting, for example. You had a giant like Standard Chartered in the more aggressive camp calling for a 1/2 point cut. Then on the other side, you had Goldman Sachs, who correctly called the more cautious 1/4 point move. This split just goes to show you that even the experts are divided on how fast the Fed should be moving.
Okay, so we've talked about predictions, we've looked at data, we've seen the divisions, but let's connect all these dots. Why should a debate about a tiny fraction of a percentage point in interest rates matter to you, especially if you're into crypto?
Well, it all boils down to this classic economic chain reaction. When the Fed cuts rates, the returns you get on super safe investments, like government bonds or even just your savings account, they go down. That pushes investors to look for better returns somewhere else, and often that means moving into assets with higher potential rewards, like stocks, and of course, like cryptocurrencies. A flood of new money into crypto could, in theory, send prices absolutely soaring.
And that brings us right back to the central question of all this. Timothy Peterson is betting that history is going to repeat itself, that the Fed will act decisively and quickly. The market, on the other hand, is betting on this slow, steady, predictable path. Now, if Peterson is right, that means the market is completely unprepared for this surprise effect, and that could make the next few months very, very interesting.